Hi, this is Brandon Bischoff with Canterbury Investment Management, bringing you this week's Canterbury Market Update for the week of September the 9th, 2019. So starting with the market state, we are still in a transitional market state 6, and this transitional market was caused by a spike in volatility which took place 24 trading days ago on August the 5th. And as a reminder, market state 6 is one of the 3 transitional market states. Its characteristics are long-term positive, volatility negative, and short-term supply and demand are also negative. And so if we're looking at the volatility, the Canterbury Volatility Index for the S&P 500 measures CVI 83. Now, short-term volatility, which is a 10-day CVI, has actually started to kind of decrease. However, even short-term volatility measures CVI 80. So volatility is, kind of high right now, so we could be exposed to some erratic movement, which would be expected in a transitional market environment. Keep in mind, back in July, CVI got as low as 50, so since then it's increased by about 70%. And so, the market did have a nice little run last week, and it kind of broke above some of those overhead resistance levels we've kind of talked about in the past few weekly updates, but that really doesn't mean we're out of the transitional market yet. As I just mentioned, CVI is still pretty high, so a lot of those outlier days could still occur. As well, David Vomand, who's an expert technician and a close friend of Canterbury, wrote in his update that the market's overbought with 93% of AIQ signals giving sells. Now, AIQ is a trading expert technical analysis program. And additionally, the NASDAQ continues to underperform on a relative basis. So if we're looking at a chart of the NASDAQ, which we're using the ETF QQQ, as well as a chart of its relative strength to the S&P 500, we can see that its relative strength recently has been kind of flat to declining. And so what relative strength does is it says, how is one index performing against another index? So in this case, if relative strength is increasing, that means the NASDAQ, if the market's going up, means the NASDAQ is going up more than the S&P 500. If the S&P 500 is going down, the NASDAQ is going down less, then its relative strength will also be increasing. However, if the market's going up, the NASDAQ's going up less, that's where you kind of see that flat to declining relative strength, which is kind of what we're seeing now. So the NASDAQ is underperforming. Ideally, in a bull market, you'd like to see that outperforming. And kind of the same story with small caps. So if we're looking at Canterbury's volatility weighted relative strength rankings, which are a risk-adjusted ranking metric, small caps have been kind of lagging behind, while large caps, like the stocks held in the S&P 500, are taking the top-rated spots. Moving on to the Canterbury Portfolio Thermostat and its portfolio efficiency metrics. The portfolio efficiency score currently measures 95, which anything between 70 and 100 is considered efficient. So in this transitional market, we do have an efficient portfolio. Our portfolio state is bullish. The volatility of the portfolio thermostat is CVI 34, and that has been low and decreasing. And the benefit of diversification is about 56%, which is a little bit higher, but we're also in a transitional market. And at transitional markets, you never know what's going to happen. So you want to see a more diversified portfolio to eliminate some of those wide swings that you could see. So bottom line, the market does remain transitional. While it did break above some resistance levels, 93% of stocks are giving unconfirmed sells, and the NASDAQ and small caps are underperforming on a relative basis. And transitional markets bring about a lot of uncertainty. From some of our Canterbury studies, we've seen that news events are more likely to be impactful in transitional markets. And that's why we see so many more outlier days in transitional markets than we do in bull markets. The Canterbury Portfolio Thermostat, which currently has a low and decreasing volatility, as well as a higher benefit of diversification, is properly positioned to sort of handle the potential wide swings that we might see kind of moving forward. And that about does it for this week's update. Thank you, and I hope you have a great week.